Hey everybody, it's Brandon Hartness, real estate agent in the foothills of Western North Carolina. And today I'm going to do a video talking about selling your home to a buyer using an FHA loan. This is a question we get from a lot of our clients, so I thought I'd do a short video on it. But before we get started, I'd love for you to hit the subscribe button below. That way you never miss another video from me. And as always, if you're thinking about selling, have questions, or just want to talk, please feel free to reach out to me anytime. You can call, text, email, find me online, message me on social media. However is best for you is good for me. I would love to help. So let's get started talking about FHA loans. So we're just going to do a short intro to this. Of course, there's a lot more that goes into it. We're just kind of going to hit some of the high points that we talk about with our clients. So the first thing is kind of what is an FHA loan. So do just a quick history lesson here. The U.S. Department of Housing and Urban Development, commonly known as HUD, created the Federal Housing Administration Loan Program in 1934 to help more Americans afford houses with government-insured home loans that are easier to qualify for than most conventional loans. So today, FHA loans represent a fair share of the mortgage market. One number I have here says in 2018, the FHA insured 12.1% of all mortgage originations. So over 10% of all mortgages in the U.S. were FHA backed. So in fact, I would argue that in some cases, it may even be that an FHA loan is the better option, the better offer, even in a multiple offer situation. So the big thing we need to know with FHA is that there are specific property and financial requirements that sellers need to be aware of in order for their homes and the buyers looking at their homes to qualify and to get the property closed. So the first thing I would say about FHA loans is that they just make home ownership more accessible in general. When you get an offer from a buyer pre-approved with an FHA mortgage, it means that they've received conditional approval from their lender and that their loan size meets or exceeds the contract price. So to obtain pre-approval, the buyer usually must meet a set of lending criteria for their mortgage following FHA requirements, and these are generally easier to meet than those of conventional loans in a few ways. So just a couple examples, an FHA loan borrower can qualify for a mortgage with a credit score as low as 500 and with a 10% down payment, or a credit score of 580 and with a 3%. So just to give you one example, someone looking at an FHA loan can qualify for a mortgage with, let's say, a credit score as low as 500 if they're willing to do a 10% down payment, or if their credit score is 580 or above, they may be able to do what we commonly think of, which is the 3.5% down payment. By contrast, conventional loan borrowers will usually need a credit score of 620 or above, and they're going to be looking at more down payment. Usually FHA borrowers can have a higher debt to income ratio. So this is just a calculation of their monthly debts divided by their gross monthly income. And FHA loans allow for a higher debt to income ratio than conventional loans, as high as 57% in some cases, whereas a conventional loan may be capped at 45 to 50%. Mortgage insurance also works a little differently with FHA loans. A buyer who puts less than 10% down with an FHA mortgage is going to pay mortgage insurance for the life of the loan, and FHA buyers who put 10% or more down have to pay mortgage insurance for 11 years. So all this is good context to have, but somewhat irrelevant to you as a seller. As a seller, you won't be privy to all the details of your buyer's loan, regardless if they use FHA, conventional, USDA, or some other type of loan. The funds coming to you at the end of the day will be the same, and that depends on the negotiated contract price and any concessions that you give. But it's just very useful to be able to think about why this program exists and the type of buyers, it's targeted toward and how it can affect you when it comes to marketing your home. So the second thing I'd say is that in some cases, FHA loans might be your best offer. So when evaluating offers, you can rest assured that a buyer who has a FHA approval is just as likely to close the loan as someone who's using a conventional loan. One of the myths we see is that FHA-backed offers are by default weak offers. It's not necessarily the case. These are often strong and qualified buyers with good consistent income. They usually just don't have the 10-20% down payment they need, and the 3.5% down payment is often what allows them to actually get into the property. So I would also say that the FHA loan is not actually the loan type with the lowest minimum down payment. The conventional 97 loan allows buyers to put in as little as 3%, though it requires them to have maybe a higher credit score. And then there's also USDA loans and VA loans, which do offer 100% financing. So one thing I'd say about the FHA loan is just be aware that the buyers are required to do a down payment there when there's other loan types where they may not be required to do a down payment at all. So just because they're struggling with the down payment, doesn't mean that they're any less likely to buy the property or that it's any less of a good deal. And typically in a bidding war, when it comes to cash versus getting a loan, of course, that's a big deal, but it's often not advisable for the seller to weigh the strength of the offer based on the buyer's loan type, whether it's FHA, conventional. Instead, we usually recommend that our clients weigh the strength of the offer based on factors like the price and the contract terms, due diligence fees, closing dates, concessions, those kind of things. If an offer is backed up by an FHA loan with a higher price and more desirable terms than other offers, often it really is the best offer. One thing I say about FHA, the appraisal process for FHA loans is stricter. If you have an FHA loan backed buyer, you can expect a thorough appraisal process. An official FHA loan appraiser must conduct the appraisal, and of course, that must follow HUD guidelines. In FHA appraisal process, the seller often must complete repairs that are necessary to maintain the safety, security, and soundness of the property, preserve the continued marketability of the property, and protect the health and safety of the occupants for the loan to close. So some examples of those necessary repairs may include inadequate forms of egress, foundation damage, a leaking or worn out roof, porch that needs to be painted or made stable, maybe it's not safe, defective paint surfaces, especially, lead-based paint, pre-1978 homes. So those are just some of the big things we see. The appraisal will not necessarily require the seller to complete cosmetic and minor repairs, such as paint or a minor hole in the wall here, but they will report the defects and consider them when valuing the property. So the note I would say is typically minor and major repairs cannot exceed around $10,000. The appraiser also must report the property is insurable and meets the minimum property standards without needing repairs, or if it is insurable with repair escrow and it requires repairs costing less than $10,000. So if the home does require over $10,000 in repairs to meet the minimum property standards, then the appraiser may deem it uninsurable. In this instance, the FHA will not insure the loan, meaning the buyer's loan will not close. Of course, if you have any questions, concerns, want to talk to us about kind of what FHA is looking for, we have a lot of experience on the buy side and the sell side dealing with these loans. A lot of times people kind of work themselves into fear and things that are kind of unfounded. So a lot of times we can go through the home, address some of these issues even before we put it on the market. So if you ever have any questions, please feel free to reach out. So another point I'd say is all included appliances must meet FHA guidelines. So FHA requires that any appliances that remain in the home and are part of the sale and contribute to the market value are operational. So in other words, if the appliance is staying, it just needs to be functional. So appliances, of course, include things like refrigerators, stoves, ovens, dishwashers, garbage disposals, microwaves, washers, dryers, things like that. The appraiser may test the appliances during the appraisal. If the utilities are not on at the time of the appraisal, the appraiser may require a reobservation at a later time when the utilities are back on, or they may say complete the appraisal under the extraordinary assumption that utilities and mechanical systems and appliances are in working order. So we've kind of seen both in our experience. Another thing I'd say, the appraisal, a low appraisal is more likely to jeopardize the sale. If your home's appraised value comes in lower than the agreed upon sales price, you might be in a tighter bind with a buyer with an FHA loan than, say, a conventional loan. Regardless of the loan type, the lender will only approve the borrower for a certain loan amount based on the property's loan to value. Okay, so the amount of money they're going to be loaning versus the value of the property, which is determined typically through the appraisal. So the loan to value, we call that the LTV. The LTV is calculated based on the down payment of the property's appraised value. For example, we can say at a 5% down payment. So the lender has approved the borrower for a loan of 95% loan to value. So you put down 5%, they'll loan you 95%. If the appraisal comes back and the sales price exceeds the final appraised value, then the borrower may no longer qualify based on that LTV. See, if we have a house, say, for $100,000, and we're going to have someone put down $5,000, and so their FHA is going to guarantee the other 95%. If the value of the home comes in at $95,000, okay, the way the FHA lender is looking at that is the total value is $95,000. So we're willing to loan you 95% of the 95,000. So a lot of times if the buyer wanted to keep the original purchase price or if the seller wasn't willing to negotiate, the buyer may have to come up with that additional money out of pocket, which is going to be a challenge for these buyers, as we talked about before, because a lot of times the reason they're using an FHA loan is to get that lower down payment to start with because they don't have a large amount of cash to close. So when we start reducing the value of the house with the appraisal, it means buyers are going to have to come up with a large amount of money out of pocket, which typically for those using an FHA loan can be even more challenging, than someone using a conventional loan. So in situations like this, sometimes the only option is for the seller to lower the sale price or for the buyer to pay, like we said, the difference in cash. However, since many buyers choose FHA loans for the low minimum down payment and credit score requirements, oftentimes they do not have the additional cash to cover the difference. So we usually see appraisal shortages in the range of like $5,000 to $10,000. That's typical. We have a house for say 250,000. We get the appraisal back. It's 235, 240, 245, something like that. And so we always advise our clients to, kind of think about the lowest acceptable price before the appraisal, kind of do a pre-appraisal counseling. And that way you kind of have your next steps planned before, emotions run high. Something I'd say just to be aware of is you can contribute up to 6% of your buyer's closing costs, and we have seen this get many deals done for buyers. So if sellers are kind of willing to work this into their price and pay some of the buyer's closing costs, it can directly reduce the amount that buyers have to show up with at closing, which can be a tremendous help for first-time home buyers and those without the large down payment. And sometimes a deal is so close to working out that the seller may just want to throw in an additional incentive, also known as a concession, and that gets everyone to the finish line. Okay. And like most lenders, FHA is going to set a limit on the contribution that a seller can make. Typically, it is 6% with an FHA loan. So you can pay up to 6% of your buyer's closing costs, which can be a huge factor. Thing I'd say is obviously certain property types are different with FHA. Let's talk about one like condos, for example. Condominiums is something we see a lot of buyers using FHA loans on. So if you're selling a condo unit, you must meet the FHA certified condo qualification list for the buyer's loan to close. And of course, you can see if your property is on that list. You can go to the HUD condominiums page and check on there. Contact me. I'd be happy to help you look that up. If your complex is not certified, you'll probably want to consider other offers from non-FHA loan-backed buyers unless you have a lot of time to spare. The buyer's lender will need to coordinate with the condominium to get it approved and expect to receive a response within a few weeks and approval maybe within 30 to 45 days. So with new complexes, HUD goes in, they consider many aspects such as insurance coverage, the financial condition, the nature of the title, the existence of any pending legal action, physical property condition, any other factors that may affect the viability or marketability of the project or its units. So that's just one example of one property that's a little different like condos. So depending on what you have, it may be just a little bit different dealing with FHA. But again, reach out to us with any questions. We'd love to help you with that. So the final thing I would say is just make an informed decision on an FHA-backed loan. As a seller, you need to know about FHA loans before you accept an offer from a buyer using one of those loans. A lot of factors that go into that. And of course, I recommend hiring a good real estate agent who's dealt with FHA loans, help sellers through this process, whether it be appraisals, negotiation, working with buyers, multiple offers, all those things. So I would encourage you, no matter what kind of property you have, if you're thinking about selling, just have questions or want to talk, please feel free to reach out to me. We would love to help you market your property, make sure we expose it to all the pools of buyers who may be qualified and get you the very best terms for your property. And FHA loans are a big way that we do that because a lot of buyers are using those loans in order to get into home ownership. So I hope you enjoyed the video and I hope you were able to find something that's useful to you. Please hit the subscribe button below so you never miss another video from me. And as always, please feel to reach out to me anytime if I can help you at all, answer any questions, or just to talk about real estate here in North Carolina. You can call, text, email me, find me online, message me on social media. However is best for you is good for me. Thanks so much. Hope you have a good day.